Hi, it's November the 17th, and this is your active FX options and futures trade updates. So we're just going to change the format of the video. We're going to start off with the day trading on FX, particularly on your spread betting, and then we'll move into our options and our futures trade, and we'll update you on SPY and other trades that might be on the horizon. So let's get started. So first up is our Forex day trading. Okay, guys, we have a set number of rules. We've done a whole video on that. I'm not going to repeat myself again. So I'll link the card here to the set of rules on this. But we've checked the economic calendar today. There's a couple of Fed speakers out today that might move the currency on the US dollar side. So we've checked our announcements. Other than that, there's no major planned announcements. And I say planned in inverted commas here. So we're looking here. First of all, we always start with our daily chart. We can see that it's a clear sideways trend. The most recent series of higher highs that was starting to happen here on a short-term basis is now over. You can see today it's kind of broken out of that uptrend. So the best thing we can say here in a daily chart is we're in an overall sideways trend and we're right in the middle of that trend. We're fairly neutral. It's not bearish, it's not bullish, it's simply sideways, and we're stuck in the middle. So this could kind of go either way. It could keep pushing up to the 118, or we can revert back down here. So we're fairly neutral on it. Now we move into our 15-minute chart on this to see is there trading opportunities. And you're going to see that we got an alert this morning here at about 4 o'clock. So our RSI, so now we go to our 15-minute window. We look for when RSI gets below 30 and buying the way back up. And then we exit when our RSI gets back up to 50. So you can see here that would have been a trade that's on and been and gone. So we're waiting on that to happen. And we've set alerts in the system that basically come straight to our phone to tell us that RSI is below 30 or it's above 70. So if it's above 70 and crosses back down, we short it, okay? So that's that one there, the euro dollar. We're waiting on that to happen again. And don't forget risk management again, guys. You only risk 2% of your capital on these day trades, and they can go wrong against you in a heartbeat, okay? So this is a 12K account, so we'd only risk $240 in euros in this trade. And we're obviously trying not to lose that money as well, by the way. So we will explain in the next one. We're looking at the next currency. This is the only other one we're going to cover today. And again, if I go back onto a daily chart on the British pound versus the US dollar, you can see here it was kind of, if we zoom this out, we went from this sideways channel here to a new upper sideways channel. But now we've broken back down and we're making a series of lower lows and lower highs. So with that information in mind going into the shorter term window, I don't really want to be going long on this trade because the overall medium term to short term trend is down and it's touching the upper end of that down channel as well. So until that's broken, I'm going to kind of trade this lean towards more being on a bearish side on the short term. So zooming then into our 15-minute chart on this, you can see we actually got a sell signal at about 8 o'clock here. So remember, when it's above 70 and it crosses, we're in a sell signal, and then we close out of it when it gets down to 50. It's at 53 now at the moment. So we would have been out of that trade pretty soon, and we would have made a few bob on that. So I just want to give you an example of how you do your risk management on this. So remember, we're only prepared to risk 240 per trade. So let's say we're putting €5 per point on this, right? And we're going to sell. You see our margin's $2,000 on it. But now it looks where to stop. Remember, we want this to go down. So the stop loss is going to be above here somewhere. So if you're trying to stay in the trade long enough, you're probably going to look at this one out here that goes kind of back to Friday. We might want to put our stop up there. And so if we did, that's about 30 points away on our stop. And you can see what happens here. It's showing there, and the arrow comes up in the system there. It's saying it's right above that. I probably want to give it a little bit more than that because I want some room above it. So we're going 40 points, and you can see then our maximum risk here is 200. Now we're going to turn that into a guaranteed stop, which means that we're guaranteed of getting out here. Now the problem with that is, look at the premium. It's 2.5 per point. It's quite a lot. And you only pay that if it's triggered. Now, because we're trading during the day at the moment, I'm going to move that back to a normal stop loss because that premium is a little bit high, and we're kind of looking, if our maximum risk here is €200 if it goes wrong against us. So now looking at the limit side, if we were to put this trade on, if you're not watching it and it, for example, the RSI to get to 50, you kind of got to guess where it's been. So I'd be looking at the bottom end of this cluster here, and I would have been putting in 1360. Now, obviously, this isn't a trade I'm putting on now. The signal has been and gone. I'm just trying to give you an example. So that was one with cable earlier on. So I would advise you guys, put in your alerts on your system for both the euro dollar and the British pound versus the US dollar. With the euro dollar, you can trade it either way, but the British pound, US dollar, I would only short it when the opportunity arises. I wouldn't go on the long side at all in the short term. So now we're going to focus in on our two option trades, starting off with our $620 put option on SPY, the short put. You can see that this is as of Friday's close, guys. We were still up $182 and we'd made 36% of our max profit. That was down from the profit we'd made on the Thursday. Having said that, the futures are up today and they're up another 0.5%. So this is going to go back up again very, very quickly in terms of profit. So it wouldn't surprise me if we were back up at around $300 in profit in this today. Just looking down here, just on in terms of the P&L, we've a 96% probability of profit on this particular trade now. So we're going to stick with that trade. Nothing to do there, guys. Leave it on. And again, it's just to highlight the beauty of what we're doing here. We're giving ourselves so much leeway for things to go wrong. When you have days like Friday and Thursday where it was down big and then it was up, these trades, they just give you a lot of comfort because you've given yourself the wiggle room for stuff to go wrong. And then on Friday, we placed another SPY trade, and that's gone really well. I mean, we were up $100 in just one day. We're going to be up even more, to be quite honest with you today. Again, the futures are up. So this was a ratio put spread. And just a brief explanation of that, that's where we basically want the share price of the S&P 500 to fall, but we got paid a credit for putting the trade on. So if it doesn't fall, we make money as well, which is great. And we got our break even on the trades down around 635. So the S&P 500 would have to fall about 7% from where it is in order to be in trouble in that trade. And we announced a risk management plan. So that's gone really well in one day. We're not going to do anything on that trade. For those of you who didn't get the trade on, you could put it on today as well. You're not going to get the same premium we got. We took in $580. That's not going to happen. You can see it's only worth $480 at the moment. And I would imagine when the market opens up, that's going to reduce further. So you're probably only going to get $400 to $500, I would imagine. But I still think that's worth doing the trade, because don't forget, you know what, even if the market doesn't fall, you've bagged $400 on the trade. So I think it's still worth putting on. So just in summary, with those two trades, nothing to do here. And the only other trade we're looking at then is oil. And you still want to see that kind of at 57, 56 before we trade that, because of the risk that's there. I'd much rather put more emphasis on SPY, which is more predictable. Unless we get oil down to 56, 57, then I think it's too hard to turn down at those levels. Okay, that's your update for November the 17th. Again, if you have any questions, concerns, or you need any assistance whatsoever, book a strategy call with us, or WhatsApp me, or contact me through the website via the chat area. Okay, thanks and bye for now.